What's up everybody, I'm Jaspreet Singh, and just when you think that things cannot get any crazier in 2022, something else happens. We started the year with record high inflation, and then home buyers were crushed with record low inventory rates, and now interest rates are also going up, making it more expensive to buy a home, to seeing a completely unexpected avocado ban from Mexico, which thankfully was reversed not too long after the ban was passed, and now we're seeing oil prices near record highs as the issues between Russia and Ukraine keep getting worse. Up until the middle part of February or so, the two biggest concerns financially on everybody's mind were inflation and the economy. Inflation was getting out of control and the economy started to slow down while people still were not going back to work. But now with everything going on between Russia and Ukraine, it's creating the perfect storm for an energy crisis here in the US, which means that we could see inflation get significantly worse than it is right now. The reason why I say that we're facing a perfect storm is because we have three different factors coming together at the exact same time. We're already facing super high inflation across the country, and at the same time we have a very low supply of oil coming from the United States itself, making us more dependent on foreign oil, and at the same time our demand for oil keeps going up, and at the same time our demand for oil has been growing significantly from 2020 to 2021 to 2022. Now, if you have no idea of how oil plays a part in our economy, if you have no idea of how these geopolitical issues are going to affect your dollars here, don't worry, I'm gonna break it all down for you, so just stick with me. Russia is one of the biggest suppliers of oil to the world and the United States, and they're also one of the biggest suppliers of natural gas to Europe. Russia had been hinting that they wanted to invade Ukraine, and the United States didn't want to see that happen. So they kept threatening Russia, saying if you invade Ukraine, we are gonna penalize you financially. We're gonna hold back our money, we're not gonna let you transact with dollars. But Russia essentially gave the middle finger to the United States and they said, screw you, we don't care. We have your oil, so we're not gonna give you oil. And then they went in and they invaded Ukraine. According to the United States Energy Information Administration, oil is our #1 energy source here, and we use it for cars, planes, transportation, heating buildings, electricity, and we use oil to make plastics. All that this means is that oil is very important for our economy here in the United States, and Russia is one of the biggest suppliers of oil for the United States, and now Russia has turned off the faucet of oil to the United States, which leads us here to this perfect storm that I was talking about. Let me start by talking about this part of the triangle, because the United States actually has the ability to create enough oil to take care of the United States, but in 2021, President Biden signed an executive order moving the United States away from drilling their own oil. The whole idea here is to make a push for green energy, to move away from fossil fuels, to move away from gasoline, that way you're not so reliant on oil. But at the same time that we're doing that, we're still so dependent on oil as it is right now. People still need oil for the gasoline in their cars, we still use oil in manufacturing, so we still use oil, but we're cutting off our own supply of oil here in the United States, which makes us more dependent on foreign oil. In other words, Russia knew that we've been relying and needed Russia's oil more than ever, so they decided to use that to their advantage by then turning off their supply of oil to the United States. The second factor that you want to be aware of is we're already facing a period of super high inflation. We're seeing the highest inflation today since 1982, and so the prices of everything from your cars to your groceries have been skyrocketing. Oil prices skyrocketed as soon as Russia invaded Ukraine, which means that now oil is going to become more expensive, which means not only is it going to become more expensive for you to fill your gas, but everything is going to become more expensive because we use gas and oil for pretty much everything. When you go and buy groceries, somebody has to deliver these groceries to the grocery store, meaning they have to be transported there, meaning the transportation cost to bring food from the farm to the warehouse to the retail store is going to cost more money. And the delivery fees to deliver something from the Amazon warehouse to your house is going to cost more money. And the price for you to take a plane ticket from New York to LA is going to cost more money because the oil, the gas used to fund all of these things is now going to be more expensive. So oil plays a part in pretty much every part of our economy, because if oil prices go up, everything across the board, not just gas prices, groceries, vacations, plastics, it all becomes more expensive because they all use oil in one way or another. And this is coming at a time where inflation was already getting out of hand. If you go and buy your groceries, if you go and pay your rent, everything is so much more expensive today than it was just a couple of years ago. Now at this point, you might be thinking something along the lines of, Jaspreet, life is already expensive as it is. How am I supposed to afford more expensive gas? And you're right. the government has already thought about this. This is where President Biden has come out and he said that they would be willing to do whatever it takes to help subsidize gas prices, to help subsidize oil prices, because the government knows that oil is going to become more expensive, which means life is going to become more expensive. Now, if you've been subscribed to the Minority Mindset, you know what the cost of free money from the government is. At the time of me recording this video, President Biden has not come out and give any details of what the government will do to help subsidize these higher gas prices. But if the government is going to subsidize gas prices, that means the government is going to be paying for a portion of your gas. Well, if the government is paying for a portion of your gas, that means the government has to get that money from somewhere. Now, we already know that the government is drowning in debt, so they don't have a pile of cash just sitting around anywhere, which means they're going to go back to the Federal Reserve Bank and they're going to use the Fed to help subsidize these high oil prices. So if the Fed then prints more money to give the government money to then use this money to lower oil prices, that means that the government is creating more inflation to fight inflation. So yay, you don't have to pay $100 to fill your gas tank, but now you have to pay twice as much to get your groceries. And then to top off this perfect storm, we have this high demand for oil. So to understand this, you have to remember that oil is used in pretty much every part of the economy, from manufacturing to transportation to gasoline. The reason why we've been having the supply chain issues that everyone keeps talking about is because we have way more demand than supply of products. So everybody wants to buy things, but there's not enough things out there. So people are buying things, but there's not enough stuff to provide. And so this creates the supply chain issues where manufacturers and companies have to produce more products to meet all this growing demand, which means we have a growing need for oil to help fund all of this demand. Now, I love green energy. I love the idea of creating new types of energy sources where we're not reliant on foreign oil. I love the idea of trying to save the environment. Who doesn't want that? But now, if we look at the economy, just the economy right now, we are very dependent on oil right now. And so we're not going to go to a green economy in 6 months. And so we are still in a very high oil demand economy. And as the demand for things continue to go up because people keep buying things, that means we will continue to need more oil, even though we don't have much oil here, and the price of oil keeps going up. And this is where it gets really interesting when you start to tie all this stuff together. Why do we have so much demand? Why do we have these supply chain issues? Everybody says that the inflation that we're seeing right now is due to supply chain issues, but that's kind of backward. The reason that we have these supply chain issues is because of the inflation. When the pandemic happened, we weren't producing anything. Nobody was working, we weren't producing products. The only thing that we were producing was money. The Fed kept printing money, and so we stopped producing products, but money kept being printed. Nobody's working, nothing's being created, but people are still getting money, and so people have money to spend even though nothing's being produced. And so now you can go out and buy whatever you want because you have money coming from the government, which the government created essentially out of thin air. Now you can buy a bunch of things even though nothing's being produced, and now you created this whole supply chain mess. So the supply chain issues were a byproduct of the inflation that happened, which created all this demand for stuff, including oil. And now the government's solution to fight this energy crisis, or at least what we know what they want to do so far, is to create more inflation. This is why an energy crisis doesn't just affect oil companies and oil investors, it affects everybody. But it gets a little bit worse because, well, this. I hate the idea of war, not just because of all the financial issues, but because of all the lives that will be lost. But now, as the United States starts to get more involved, there's going to be another cost to that as well. War is expensive. Now, I'm going to focus just on the financial side, but when you hear people talk about the inflation that we're seeing today, it keeps getting compared to the inflation that we saw back in 1982. Back then, in the 1970s and the early 1980s, we were in a period of stagflation, which is the worst case scenario for the economy, because stagflation is when you have a slowing economy and growing inflation. So people's wages are not growing while the prices of everything around you keep going up. The reason why we were experiencing that type of stagflation in the United States was because we had so much government spending from the Vietnam War, and then we were facing an oil crisis in the 1970s. Is that starting to sound familiar? Except the difference now is we're already facing super high inflation because of the pandemic. We're already seeing super high inflation because of all the money printing that we have done. And now we're on the verge of entering an oil crisis with geopolitical issues that keep getting more tense. Wars are expensive, and now we're in a stage where our economy is already starting to slow down, and as soon as these geopolitical issues started to rise up, that's when people started to get worried about the idea of stagflation happening now again for the second time since the 1970s and the early 1980s. It hasn't happened since. So now that you understand what's going on, the question is, what do you do about it? 5 things. The first thing you gotta do is live below your means. You need to be saving some money right now because things are going to get more expensive. And the last thing that you wanna do is continue to stretch yourself thinner and thinner and thinner to maintain a certain lifestyle. Things are going to get more expensive. Things have been getting more expensive. And I know this is going to be hard to do, but it is so important to make sure that you're living below your means. That way you always have some sort of cushion. That way you can start paying down your debts. That way you have some extra cash to invest. And that way you have some cash to put aside for some savings. You need to build some savings. Now I know it's weird to be saving your money when inflation is so high because inflation is diluting the value of your savings. But you need to have some savings, not as your wealth building tool, but as something to protect you against any sort of financial emergency. Second, once you start living below your means, don't save everything. You need some money put aside for your savings so you have some cash for your financial emergencies, but you don't want to be saving everything because saving is losing. You need to be investing your money in assets which create more value. That way you can get the benefit from inflation. So you want to make sure that you're taking your money and you're putting it to good use. So maybe that means investing your money in stocks, or real estate, cryptocurrency, physical commodities, whatever it is. You need to invest your money, and the way that you get the best returns is by also investing in your own education. That way you know how to invest your money. And if you're looking for some sort of investing education, you can check out Market Insiders, and I'll give you a free 10-day trial to try out Market Insiders. It's an investing education platform that I put together, and I'll put a link to where you can try it out for free in the description below. When you have all this volatility with things going on in the markets and the geopolitical world, you want to make sure that you're actually diversifying your money. Because when most people talk about diversifying their money, they're not actually diversifying their money. They have some of their money invested into an S&P 500 ETF. They have some money invested into an innovation ETF. They have some money in a growth ETF. But at the end of the day, a lot of these ETFs are investing in the same companies, and you're only investing in paper assets. So if the stock market goes down, everything goes down. This is where you want to make sure you have some real diversification with your money. So what that means is now when you're investing in the stock market, you want to have some real diversification. Obviously, you have your S&P 500s, you have your ETFs that give you exposure to stocks in the United States, but you also want to be investing into things like emerging markets. This way now you're not just exposed to the United States economy, you have exposure to other economies around the world. And you also want to consider investing your money into hard assets, things like physical real estate, because this is going to give you different protection than the stock market is. Plus, real estate also pays you with cash flow, and you get some tax benefits if you own some physical real estate. Now, you can also consider owning physical commodities like gold. Gold is your traditional inflationary hedge, and it has been around for centuries. And so this is another way to protect your savings instead of just keeping it in cash. And of course, if you're a fan of cryptocurrency, you can also consider owning some Bitcoin, adding a little bit of Bitcoin into your portfolio to again give you some of the upside if Bitcoin continues to grow in popularity. And it's supposed to also be another inflationary hedge, although it hasn't been around long enough for it to really prove itself as an inflationary hedge. But you can own some Bitcoin kind of as a piece of your speculative part of your portfolio. The fourth thing that you got to do is you got to be earning more money. The reality is it's going to cost more money in order to survive in this economy. That's just the way it is. And so what you want to be doing is you need to make sure that you can earn more money. Maybe that means you work harder at your job, you work to get a raise, you work to get a promotion, you work to get a second job. If you like your job, if you like what you're doing, then you can continue doing that. Or maybe you consider taking on a side hustle. Thankfully, we're in an economy where it's much easier to find a side hustle, to find a freelancing gig where now you can pick some extra hours on your own time, on your own schedule as a way to earn some more money, because the reality is life is getting more expensive and you're going to need more money if you want to continue being able to live your lifestyle and being able to invest your money as well. And number 5, keep learning, keep investing in your education, because things are going to be changing and you need to be educated, especially financially educated, because money is changing, times are changing, and the economy is changing, and you don't want to be the person that's left behind, which is why you always want to be investing time, maybe even money if you want to buy some classes or whatever into your financial education. That way you can keep learning. And even if you're not buying classes, at least keep reading books, keep educating yourself, because the moment you stop learning is the moment you start dying. And when it comes to your money, you need to make sure that you keep learning about how to be good with your money. If you enjoyed this video, here's a video how I'm investing my money in 2022 that I think you'll love. And if you're interested in generating passive income, our team put together an ebook that you can read for free on how to start generating passive income, and you can download it by clicking that button below.